commodity currencies, the latest updates from the UK, and we're in the third week of November. This is the Weekend Wrap with Bob Mason of FX Empire. Mr. Mason, thank you so much for joining us today. So we're in the third week of November. Maybe you can give us a little insight into what's going on at the moment.
Economic data was on the quieter side through the first half of the week. From the US, we had housing sector data, and on Thursday, the Philly Fed manufacturing numbers. The numbers were all actually skewed to the positive. The housing sector numbers continued to support the positive sentiment from consumers, largely driven by low mortgage rates and strong employment figures and labour market conditions. The numbers ultimately had a muted impact on the majors, however, even with a slight pickup in monthly consumer prices in Canada, doing very little to the loonie. Geopolitics remained a key driver. We had mixed sentiment towards trade as contradictory messages came from Beijing and even Washington on progress on trade. Trump's unwillingness to roll back tariffs raised doubts over whether China would be willing to go through to a phase one agreement. There was also the issue with Hong Kong. The Senate and the House of Representatives passed through two Hong Kong bills supporting the Hong Kong protesters, essentially, that got the condemnation of China and raises prospects of further friction between the US and China going forward, and adds further questions onto whether a phase one agreement will get executed before the end of the year. For the loonie, negative sentiment towards trade did put pressure on the loonie. On Wednesday there was further downside as news hit the wires of the national rail strike impacting domestic oil prices. Found support on Thursday, however, with Bank of Governor Powell's talking of monetary policy and delivering a more hawkish sentiment. He said that he felt policy was in the right place at the moment to support the economy. Elsewhere, the ECB, the Fed and the RBA delivered monetary policy minutes. While the ECB and the Fed delivered a few surprises, markets expecting the Fed and the ECB to stand pat. The RBA hit the Aussie dollar on Tuesday. Talk of rate cuts in the last meeting, pressured the Aussie dollar. The markets had expected the RBA to be standing pat near term over concerns of the effect of rate cuts on consumer sentiment.
It's been a busy week and talk of Brexit has somewhat slowed down. What's the latest coming out from the UK?
It was a mixed week for the pound. There's no data to consider, really. Focus remained on UK politics. On Monday, the Conservatives saw their margin in the opinion polls widen, which provided the pound with support at the start of the week. On Tuesday, however, the first leadership debate, weighed on the pound. YouGov Snap polls showed that, Boris Johnson won 51% to 49%. However, the devil was in the details, really. Viewers felt that Corbyn performed better, getting 67% of the support. Boris Johnson, however, also got favourable numbers, 59%, but that was, falling short of Corbyn's number, suggesting that the polls are a little bit too optimistic. The pound hit reverse as a result. Going into the rest of the week, opinion polls showed that the Tory party, margin narrowed. It went from 47% to 45%, with the Labour's seeing their vote share rise to 30%. Next up's the live televised debate, which is this evening. That includes the four party leaders, which should certainly garner plenty of interest going into next week.
With the Eurozone flowing well, how did the commodity currencies do during this period?
It was a mixed bag for the commodity currencies going through the first half of the week. The Aussie dollar was under pressure. The RBA minutes really did weigh. The markets had expected the RBA to stand pat alongside the Fed and the ECB. The minutes suggest otherwise, and further weak economic data will, pressure the Aussie dollar further. The Kiwi dollar found support. The RBNZ's decision to stand pat continues to support the numbers, and economic data this week, while on the lighter side, was positive. Wholesale inflation picked up. Going across to the loonie, Bank of Governor Powell, as I said, talked up monetary policy, saying that rates were at the right place to support the economy. There are concerns, however, over the possible impacts of an extended national rail strike. Though, looking at the early start of this morning, Going into the weekend, the loonie was standing its ground, supported by the shift in sentiment towards policy. Trade will continue to influence, any further negative updates from Beijing or Washington on trade, will impact crude oil prices and ultimately loonie and other commodity currencies.
Mr. Mason, thank you so much once again for joining us today. That wraps up our midweek wrap for this week. So we'll see you again next week. Thank you so much.